Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. It is Sunday, November 10th, and this is my detailed technical analysis review, weekend edition of the stock markets, trading systems, Bitcoin, precious metals, US dollar, you name it. I don't need to get into the election details too much, but as you know, the election last week, the market went crazy afterwards. Elon here, you can see him. Tesla stock went crazy. We had the FOMC on Wednesday. They lowered rates a quarter point. The S&P 500 is at new all-time highs. Same with the S&P. Same with the Nasdaq. Same with the Dow Jones. Russell 2000 small caps have been killing it. They haven't taken out their all-time highs yet, but they're not too far away now. Our mechanical trading systems continue to kick butt. Last week we had the breakout system trigger on SPY and ES futures, and on Friday we actually had one of our mean reversion systems, volatility systems, trigger a short on SPY. That's the VIX SPY volatility system. And of course our trend KISS systems have been kicking ass. You can see various gains here. You can see Tesla 28%, URA up 3.8%, various indexes, UPRO, SSO, NVIDIA, you name it. Bitcoin's up nicely, making a new all-time high. Again, lots to discuss. And just to recap, my name is Matthew Frailey. I founded Breakpoint Trades 21 years ago, back in 2003, to provide the most advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems like you see here. Again, we provide 5 detailed market newsletters per week, dozens of actionable trade ideas, an active community, and of course, we send out trade notifications to our mechanical systems for those who want to follow a mechanical approach. Again, if you're just a YouTube subscriber, I suggest subscribing. And if you do subscribe, reach out to us. We'll give you some help because there's a lot of info here. New subscribers can get lost. Anyway, let's get back to this market newsletter at hand. I'm going to go ahead and get this recording started for our website subscription service. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a nice weekend. It is late Sunday afternoon. It is 5:40 Eastern Standard Time. Market futures are going to open about 20 minutes. I'll let you know how those open. This, of course, is my technical analysis weekend edition review of the markets, trading systems, and it is, again, November 10th on the weekend. Okay. If you're new to Breakpoint Trades or YouTube, these weekend newsletters tend to be anywhere from 40 minutes to close to an hour. They're very detailed. They're not dumbed down for the low attention span TikTokers that can only look at things for 1 minute. We dive deep down into the charts. They're a place to learn, etc. So hopefully you're here for that. Again, let's go ahead and get started here. So this weekend newsletter is divided into 6 major sections, same general theme as I always keep. First off, I talk about the general market, make my own opening statements. Then we're going to discuss some admin comments. We're going to discuss the systems. We had some mean reversion systems go long last week. We actually had one go short on Friday. And of course, I'm going to discuss the KISS systems. Then we'll move it to the general market analysis. We do a top-down approach on the major indexes from the monthly, weekly, daily, and intraday charts. Then we'll look at a few market indicators, look at the bond market. We'll review some major sectors. We'll look at the US dollar, Bitcoin, cryptocurrencies. Bitcoin's been doing well. We'll also look at precious metals, gold, silver, platinum, and GDX. We've seen a correction in that area. Not surprising. And we'll review trade ideas. We've had some amazing trade ideas, guys, and I added some new trade ideas here this weekend. That said, the market is getting a bit stretched here in the short term, so be careful. I did have one hedging instrument, SPXU. Now, as far as the market, like I said, long-term uptrend, intermediate uptrend, short-term uptrend. We made new all-time highs last week on most of the indexes. Again, I don't need to go into the election in detail. You all know how that went. Huge ramp up after the Trump win. And one thing I've been saying on the S&P 500, that round number of 6,000 was a magnet. And if you've traded the markets long enough, guys, these round numbers are big levels. They're important psychological magnets. When the S&P 500 hit 5,900, it it pretty much set in stage we're going to hit 6,000. And that was hit last week. Friday's high was 6,012 before finally pulling back to 59.95. So we hit that round number. That was a magical target that needed to be hit. Short term, we are quite stretched. On a 60-minute chart, I can count 3 waves to the upside with some divergence. So I wouldn't be surprised to see a pullback sometime early this week, at least as a wave 4. There's other options. I can count 5 waves up on a 15-minute chart. Anytime I start seeing 5 waves, I start getting cautious looking for a reversal. So be aware of that. Again, great week for the market. For the week, the S&P and Dow gained about 4.65%. The triple Qs gained 5.7%. While the IWM small caps outperformed, gaining 8.7%. Remember, a couple months ago, I've been very bullish on the Russell, stating that it would come and play catch-up to the general other indexes and outperform them, and that's what it's been doing here for the last several weeks. Like I said, short term, getting a little cautious here. Can count 5 waves up on a 15-minute chart, and on a 60-minute chart looks a bit toppy, so I am a little cautious maybe for a short-term pullback here. Also, the VIX, we have a VIX Bollinger Band system. The VIX closed below its lower Bollinger Bands for 3 consecutive days. So we're now on look for a VIX Bollinger Band sell signal. That's when the VIX closes back inside the Bollinger Band. So be on watch for this week. Other items, US dollar gained 0.7%. That says 7%. It's 0.7%. While the 10-year yield lost 1.3%. Overall, most commodities were up, save for copper. DBC, the index, is up 0.7%. That said, the precious metals got nailed. Gold down 1.8%, silver down 3.6%, palladium down 10.3%, GDX, the miners, down 2%. Remember, guys, we're still in earnings season. Even though we've had a lot of earnings report, we still have plenty to go. Make sure to check those from the link here. And as far as the news this week, like I said, the bond market is closed on Monday for Veterans Day. So again, much congrats to our veterans. Support them. And some other news items: CPI, core PPI on Wednesday, PPI, core PPI on Thursday, retail sales, import, export prices, New York manufacturing and industrial production on Friday. All right, guys, let's go and jump to these charts. So let's talk about the admin comments first. Talk about our system. So this image below, item number 2, this shows you some of the open mean reversion type systems. So we had a RSI 40 close out last week. It was a nice winning trade. We had 3 other mean reversion systems that were long. They also caught that little pullback in late October, closing out. Last week, we had the SPY breakout go long on Wednesday after that election. You can see at the upper left. And then the next day, the breakout system went long on ES futures. Now in SPY, we have a fairly tight stop on this. A stop hasn't been triggered yet for the ES futures. And also, on the flip side, the volatility systems, based on that VIX, and the S&P and the Bollinger Bands, one of my custom SPY volatility systems went short on Friday. That's not the standard system. That hasn't yet closed back inside the Bollinger Bands, but this is a custom one, and that went short on Friday. Next, image number 3. So here shows you the mean reversion system trades that have occurred this year. This year, the market's had a great year. Mean reversion systems tend to do better in high volatility markets, downtrending, bear market, stuff like that. For example, 2022, these systems did about 3 to 4 times the number of trades. But still, you can see here, the SPY systems have done 24 trades this year. We have the open trade on the breakout. Stop is 590.74. And on ES futures, MES futures, we have the open breakout as well. You can see all the nice trades here. Again, a couple losers here and there, but overall, these mean reversion systems are around 90% profitable. They're very accurate, and you can see the nice gains. Again, if you were here at Breakpoint Trades and this is all you didn't do any of our trade ideas, none of our other system trades, you'd still pay for your membership subscription dozens of times over. Okay, so again, these are open. Next. Also talking about the the high performance KISS systems, remember they're opposite of mean reversion. Mean reversion systems, guys, are short term. They're looking to hit singles essentially. In a baseball analogy, they're not trying to hit home runs. They're not trying to stay in the market for long periods of time. In fact, they're in cash most of the time. The KISS systems are opposite. They're trend following. They're long only. They try to stay in uptrends for as long as possible. Okay, so they're opposite to the mean reversion. They typically are long when the mean reversion are flat. Anyway, awesome trades here on our high performance. Look at these gains. These aren't back tested results. These are live gains, folks. And go back to that. Tesla, you can see we have a Tesla open system trade up 28.6%. That's awesome. But look at all, you have the indexes here, UPRO, NVIDIA, TNA, URA up 38.8%. Again, all these are live trades. If for subscribers to this system, you could set favorites, get SMS text notifications so you can follow these systems live in your account. It's 100% mechanical. So if you want to have your hand held, you don't want to make decisions based on a chart, this is a great option, along with the mean reversion systems. Image number 5, here's Tesla. As you know, Tesla had a big week last week. Not surprising, he's a Trump supporter, and it's, of course, benefiting with the market. Huge breakout here from this kind of cup and handle-like pattern. Again, we have a couple open Tesla long systems. They went long well before the election, so they're up very nicely. Here's the Tesla 130-minute KISS system. Just show you the statistics. You can see system is up 57.9% this year. That is almost double what buy and hold is, which is up 29% on 8 trades. Max drawdown of 7.7%. Max drawdown on buy and hold is 44%. So you tell me, guys, which one would you rather sit through? A 7% drawdown or a 44% drawdown? I couldn't, just let you know, I couldn't handle a 44% drawdown. I am too risk averse, but I can handle that. Okay, that's the beauty of the KISS systems. And average hold time on this system, for example, is about 35 days. So it's not a day trade system. You could work a job. It's not in and out, during the day where you have to monitor the markets. But a great example of the KISS system in real time. Okay, let's go and move back to the general market. So image number 7, this shows the index sector table, what transpired on Friday and last week. Again, I already covered a lot of this. Like I said, big gains for the major indexes, which I already discussed. You can see these gains here. Nice gains on the Russell that's been outperforming for a while. Remember, I've been bullish on the Russell here for the last few months. I said it would play catch up, and that's what it's been doing. Everything else here has made new all-time highs except for the Russell. It's not too far away. As far as the 21 market sectors, again, very broad-based rally. Only sector that was down was drugs, typically a defensive sector. But everything was up here. Big gains across the board here. Oil services up 9.7%. Banks up 8.4%. Been big gains here across the board. Currencies, US dollar up 0.7%. Bitcoin had a great week last week, up 11%, and it's already up here this weekend. Commodities pulled back generally on Friday, but they closed up for the week. The index is up about 0.7%. Crude oil up 1.5%. Really, the only commodity down here was copper. Now, precious metals, they were all to the downside. So we'll see if a correction there has started, maybe a bigger wave 4 correction on gold. We'll see. The stocks were leading to the downside, the miners, they tend to lead. And as far as the bond market, we finally saw a pullback in the 10-year, 30-year Treasury yield last week. And of course, the yield curve is, remember, no longer inverted. Finally, item number 8 shows you the economic news calendar, which I already discussed. Again, Monday is the bond market's closed, and Wednesday, CPI, those are the couple of the big news items. Again, other news items here this week, which we'll discuss in our newsletters during the intra-week. Okay, let's go and jump to the major indexes, first part of the newsletter. So this chart shows you the 5 key major indexes with the Bollinger Bands. Again, you could see these big candles last week, all closing above their upper Bollinger Bands. Essentially, you had a pullback, basically a 2-week pullback down to the 9-week EMA and rebounded right off. You can see there. Huge move on the Russell, of course. Next, chart number 10, here's the daily chart version of that same chart. Again, you can see we were trading at the lower Bollinger Bands on these major indexes. Then, of course, huge pop, of course, closing very strong late in the week. Next, chart number 11, here's the Dow. Dow is only 30 stocks. We don't typically show it often, but I have been lately since the big move here. Here you can see I added a channel. Now we're testing the upper portion of the channel, so that's a potential short-term resistance. There is some MACD divergence here, potential on all these indexes now, since we're at new highs, potentially fifth wave highs. So we got to monitor that now with the potential 5 waves up, guys. Okay, and we're at some resistance. Next, let's move on to the S&P 500 chart. So we'll start with the bigger picture. First off, here's a monthly chart showing a potential wave count. Again, guys, I want to stress, don't get too bogged down to these wave counts, because with wave counts, there's always alternatives. This is just for academic purposes. But this shows you the uptrend from the 2009 bottom. Essentially, we've been in a secular bull market now for almost 16 years. And this labeling that we added here, and it's a valid label, we could be nearing the end of that. We'll see. Again, don't put too much stock in that at this point, but just something to point out. One possible target could be this upper channel line, these parallel channels. Next, chart number 13. Here's another monthly view. Shows you the same channel. And again, I like to show this chart just because for those of you who are super long term, and again, we have a system on the website called the 401k paint dry system that can hold trades for years at a time. It's like watching paint dry. It's not my style. I'm more of a KISS system. I can handle that time frame, but holding trades for years, I mean, that's if you're retired and you're not doing anything. But just showing you guys just this monthly chart using a 14 link stochastic at the 50% area tends to be a very important level on the stochastic on a monthly chart. Notice in bull markets, you stay above the 50% area. In bear markets, you fall below it. You could see this correctly identify the 2008 bear market, the tech bubble crash, and then got you back in fairly quickly after those bottoms occurred. This also fell below 50% there in 2022, which was a short-term bear market, and then came right back above. So it's a great little guide long term. And here's another big picture chart. I haven't shown this chart for years. I made this chart about 5 years ago. It's a chart that goes back to 1924 on the S&P. Basically, you may want to pause the newsletter or the YouTube video and just look at the chart, because I'm not going to spend too much time on it here. But if you know your stock history, markets tend to move in secular bull and bear markets. Those are long-term cycles. Cyclical bull and bear markets are short-term, okay, lasting maybe 1 year, year and a half, stuff like that. Secular markets, secular bear, secular bull markets can last 16 to 20 years, okay? So you can see your secular, after the 29 top, you could see, you had your secular bear market, then you had a secular bull market last into late 1960s, then you had the 16-year secular bear market from the late 60s to 1982, then the secular bull market to basically 1999, then we had another secular bear market, and since then we've been in a secular bull market. We're about, again, from the 2009 lows, we're about 16 years into it. March will be 16 years. So we'll see. Again, secular bull markets, I've been noticing, have lasted on average about 20 years. But again, there's not a lot of data points here. The only difference here I see is on the chart, some of these indicators, all these other previous secular bull markets, you had this expansion on the ADX indicator. You see that? Where the ADX really expanded out. You had it back in the 50s, 60s, you had it in the 80s, 90s. We haven't really had it here after the 2009 bottom. It's been more subdued, so it's one difference. But anyway, we'll see how long this goes. Next, moving back to here's a weekly chart of the S&P, again up 3.5% for the week. Let me start this again. I had to refresh the chart. So here's the weekly view of the S&P. Again, it made 4.7% last week. Again, you can see we had the 2 down candles right into that demand zone that we had highlighted ahead of time. We held that. If we hadn't held that, we could have easily pulled back to the lower channel, but we just We pulled right into the demand zone and boom, huge rally. Okay. You can see still have the parallel up channel. If we get a little more follow through, maybe we tag the upper channel. By the way, futures just opened and ES futures are up about 7 points at the moment. And like I said, Bitcoin's up over 3,600 and gold is down 5. Next, let's move. Here's another weekly chart. This is the weekly KISS system. So in addition to the high performance KISS systems and the daily, we also have weekly versions. Again, those are more for our retired folks that want to do very little trades. These can hold for years at a time, and you can see again a lot of these went back. This S&P went back long in early 2023. It's held the entire time. Cool. Anyway, the smart trailing stop last week raised from 53.47 to 54.91, so that's a big jump. Nicely protecting those gains. Also see a new smart trailing stop on the DIA and on IWM. So nice moves there. Next, let's move on to the daily KISS system for the S&P. So here's the S&P daily KISS high performance system. And the cool thing is on Friday, the smart trailing stop jumped way up to 57.95. It was 56.56. So that's a good 140 point jump. Awesome to see that. Again, you can see the moving average ribbon was pinching. BPT May was pinching and the ribbon was under a bullish configuration. So we were looking for a rally. Nice move, right? Again, this is a great example of the KISS systems. You can see it went back long on October 31st, 2023. You can see it's basically caught these entire uptrends. Yes, sometimes it gets out for a week or so, gets back in. But you can see back in July, August, it got out, it got back in earlier than where it got out of. The whole point of the KISS system is to keep you in these uptrends and keep you protected in case there's a 10 or 20%, 30% market correction. You don't have to go through that. You can see the KISS system went back long in early August, and it's been long the entire time. That trade is up very nice on SPY, SSO, UPRO, you name it. Next, image number 18. Here's the 4 time frames. So here's the daily in the upper left. We had those support cycles as we talked about last week. Those held. Those cycles end up being a powerful indicator. You can see we have in short term, we have a DeMark 9 on the half day. Now, we had a DeMark 9, 13 on the 78-minute. We've pushed higher. Again, we are quite stretched here short term. Moving average ribbons are getting a bit wide, so we may need to see some mean reversion action sometime early this week. Next, let's chart 19, moving back to the standard charts. Here's the S&P with the cycles. I've been showing this cycle chart since early August. And one thing I was pointing out is that both of the cycles, the long-term and the shorter-term cycles, all pointed to a low in early November. I noticed that ended up matching pretty much right here with the election, right before that big pop. So that played out. Now the next time the cycles converge, the shorter term cycles don't converge until sometime in February. Next, chart 20. Here's the daily view of the S&P. Again, been showing this for quite a while. We had that perfect ABC wave 4 pullback in August. Wave 1, 2, we broke through that July high there in September, which became support. You can see it became support in late September and in October. Okay, this is one way to label this. The bullish way to label this would be we're now in a wave 3 of 5. So that means we still have a wave 4 and a 5 to go before completion. We do have some active divergence setting up here, so keep an eye on divergence. Divergence is not a sell signal on its own, but it can lead to some corrections, so you got to keep an eye on it. But right now under this labeling, we're in this wave 5, and this could be theoretically wave 3 of 5 with more to go. Again, there's other alternatives, guys, which I'll show. Chart 21, here's another daily chart we've been showing. We've been looking for this new high as a wave C of 5. We now got that. We're near the upper trend line of this channel. Could be a little area for the market to pause soon. Next, chart 22, another chart of the S&P. Again, you can see the wave 1, 2, 3, 4, 5. Under some Elliott wave, it's possible you could be completing an entire move. But again, to me, that's too early to say that. So just pointing that out. And chart 23, here's yet another version. 1, 2, 3, 5, A, B, C. Okay, that's yet another version. Notice how we found support at the demand zone early last week. Again, the thing about wave counts, guys, don't get too bogged down on them. Follow price action, follow your triggers. But the thing about wave counts, there's always multiple counts. But anyway, so that's the various scenarios. All right. But either way, we've always favored a new all-time high, and we got that. So whatever we were favoring did play out. Next, chart 24, here's a half-day chart. So again, one way, the bullish way to view it, and Steve labels this as an alt. So that's his alternative view, would be we're in a wave 3 now of 5. Okay. The other way you could label this would be we're completing soon a wave 5, and then we're going to lead to a deeper pullback. Again, what's important for the bulls is to hold that key pivot level at the November lows. But honestly, at this point, that's 300 points away. So, again, follow your triggers. We are quite short-term overbought. Do you want to sit there and hold it all the way down to there? Probably not. And obviously, in the KISS systems, would be out well before then. But again, we're right at the upper channel line. So this is a resistance area. We have a little spinning top doji late in the week. Or late on the day, late on Friday. Next, chart 25. Here's a 2-hour chart I've been showing. We had a coil, which we broke down from in October. The pullback was 5 waves into a support zone. You can see here right around the 38% fib we held. Wave C of 5. And we've had a nice move. For me personally, what I see here is, to me, this looks like a wave 3. It doesn't look like an ending move. You don't have any MACD divergence. So while we could get a pullback here, I don't view a top in place right now. Chart 26, there's a 60-minute chart, shows you that same coil breakdown, and then huge rally. Here's what I'm talking about, guys. So if you look at the 60-minute chart, what do I see? I see from this 56.96 low, I see one move up, one wave up, a wave 2, and this to me is a big wave 3. Wave 3s are your trending moves, and that's clearly what it is. So to me, this looks like a wave 3, not a wave 5, right? So if we do get a pullback here, I favor myself more as it is a wave 4, then come up again in a 5. We are setting up a little MACD divergence, okay? So that would favor a pullback here. The MACD is really far above 0, and when I see that, a lot of times that's more of a wave 3 indication. So we'll see. But that's more what I favor at the moment. By the way, there is an open gap to the downside here now. These gaps tend to be magnets. Actually, there's a couple gaps. So there's one gap right here. That would be the case more if you get a pullback here and it's a wave 4. If you were to fill this gap down here, though, then it's not a wave 4. It's too deep. And chart 27, here's a 15-minute chart. You can see the wave 1, 2, 3. Again, maybe we get a little 4 down here, then a 5 up. Once we get that 5 up, then I'd be more cautious for some sort of pullback in the market, guys. Next. Chart 28, here is SPXU. That's the triple inverse ETF for the S&P. So if you want to hedge, this could be a little hedge. Notice you got a little tight doji on Friday and then a little bounce. So you could be long this as a hedge with a stop right at that 21.44 low if you so felt. Next. Let's move to the Nasdaq. Here's the Nasdaq High Performance Daily KISS system. Again, same thing like on the S&P. It's followed the trend very well. Current trailing stop is still 483.70. I'd expect we'd see this to jump up quite a bit early this week. Okay. Next, chart 30. Here's the 4 time frames. Daily is the upper left. We had those support cycles where we bounced from early last week. Again, those cycles tend to be quite powerful. Half-day chart, we have the DeMark 9 and A. That's amateur buying. Moving average getting quite wide here. You can see it on the 130-minute chart, a bunch of A's. So we are quite stretched, so just be aware of that. Next, chart 31, moving back to the standard charts. Here's the weekly view of the triple Qs. Again, up 5.5% for the week. You can see this uptrend channel. You can see back in August, we bounced right off that demand zone. But otherwise, new all-time highs on the Nasdaq. Chart number 32, here's another weekly view of the Nasdaq. This shows you a wave count. So under this view, we're now entering this wave 5. Again, I'm talking about wave 5 from the 2022 low. Once that wave 5 ends, notice we have MACD divergence. By the way, wave 5s always have MACD divergence, guys. So that's a tidbit in case you didn't know that. Anyway, once this ends, then we're looking for a deeper pullback. So again, maybe this doesn't end to the end of the year. We are in November, tends to be a decent time of year, but maybe it doesn't play out a big correction until next year, but it is coming sometime. We've had a hell of a run the last couple years. Next, chart number 33, here's a daily chart. Remember, the July highs was the magnet. We've been talking about that for the last couple months. Well, it was finally hit last Wednesday, and then of course we rallied up more Thursday and Friday. We found support at the demand zone, so we made a new all-time high. Next, chart number 34, here's a half-day chart. We busted out of there. By the way, this area, 502, 501, is now support on a pullback. Next, chart number 35, here's the 60-minute chart. Okay, the same thing as I discussed on the 60-minute S&P. What I see here is wave 1, 2, and a 3. This looks like a 3, so I'd favor a pullback being as more of a wave 4. Notice there is an open gap now from last week on Wednesday, so that could be a magnet on wave 4. There is a gap below as well, but that's too deep for a wave 4. And chart number 36, here's the 15-minute chart. So similar look to the S&P. Next, let's move to the Russell 2000. Here's the Russell 2000. Remember, this ascending triangle I've been showing, and I've been talking about this for months, that I thought the Russell would break out and outperform the other indexes, and that's exactly what it's done here lately. Big, huge move last week. It's had a nice pop. Hope you guys bought this inside the pattern. It was an excellent textbook ascending triangle pattern. Next, chart number 38, here's the weekly view, up 8.74%, huge up candle, basically into this resistance area. Here I added a channel. We're at the top of the channel. Again, the Russell is the one index that hasn't made new all-time highs. The new all-time here is still in 2021, hasn't been taken out. Next, chart number 39, here's the 30-minute chart of IWM. So before the election, Steve pointed out this J-Lo bottom. So just when you thought you knew every stock chart pattern, they all been discovered. I guess there was the J-Lo bottom that was discovered. Again, I hope no one gets offended by that. It's all in good fun. Steve drew this, and I had to add that image. It's just hilarious. But there you go, guys. I taught you something. J-Lo bottom is your new stock pattern. All right, that does it for the major indexes. Let's move on. Chart number 40, here's the VIX. So guys, the VIX now has been below its lower Bollinger Band 3 consecutive days. So when this closes back inside, that'll be a VIX Bollinger Band sell signal. Okay. Obviously, the VIX Bollinger Band buy signals have worked awesome here, as you can see. Just amazing. So now one of my custom VIX, S&P VIX systems went short on Friday. It uses a custom Bollinger Band setting, so that's why it triggered. But this, we'll keep an eye on this standard one. I'll let you know. Chart number 41, here's a 60-minute view of the VIX. Notice we have a little MACD divergence now filling here, so that's why I would look for a bounce sometime soon. The VIX loves to fill the gaps, even more so than the indexes. You can see all these previous gaps got filled. Well, notice there's 2 unfilled gaps to the upside now. Okay, so if the market just has a little wave 4 pullback, I'd expect this first gap to be filled. Now, if we were to have a deeper pullback, then you have the other gap up here. But at minimum, I'd be looking at this gap, first one. And chart number 42, here's a chart of the VIX VXV ratio. This had also given a nice buy signal basically in late October when this got really high. Typically, these levels are bottoming patterns. Oh, and here's a chart showing both the VIX and the VVIX ratio and the VVIX itself. That's another thing. That's, again, both the VIX and the VVIX are below their Bollinger Bands. All right, moving on to bond market. Here's high yield corporate. Remember, high yield corporate, I was showing this channel for a while. It basically tested the top of the demand zone, 50-day moving average. It held it, and it finally broke through the channel last week, making a new all-time high. That said, MACD is lagging here, so there is a divergent potential up here eventually. Now, moving on to a shorter time frame, here's a 2-hour view. I didn't add any trend lines here, but notice here, this still looks pretty healthy to me. There's no MACD divergence here, so maybe if this pulls back a little bit, maybe it flags out. So this doesn't look toppy to me yet, is my point. Next, chart 46, here's TLT 20-year bonds. As you know, that's had a big sell-off. So we have potential 5 waves down. Nice bounce last week. So if it's possible, if TLT put in a bottom, that means rates should start coming down. That could help things, especially the housing market. Chart 47, TMF, that's the triple TLT ETF. This is what I went long last week just because of leverage. Same pattern, nice bounce. Now we'll see if it can take out that resistance level on that. And chart 48, here's the 10-year treasury yield. After a heck of a rally from the September lows, finally a pullback the last couple days. And here's the weekly chart. Again, it's had a heck of a rally off that demand zone support that we had in place. Finally, a little spinning top doji, maybe a little topping zone. Notice your moving average ribbon is pinching on the underside here. And guys, moving on to the next part of the newsletter, let's review some of the market sectors. So here's transports, IYT, again, made new all-time highs. Not surprising. Chart 51, utilities. They've been weakening. They had a nice MACD divergence at their recent high at 82.50 in October. They bounced a little bit late last week, but now they have the moving averages above here as resistance. Chart 52, here's XLP, consumer staples. Nice bounce on Friday. Otherwise, they're technically in a downtrend here for the last 2 months. Chart 853, industrials. Boom, rallied to a new all-time high after bouncing off that 50-day moving average. We do have some pretty good MACD divergence. Notice how the MACD is really lagging. Chart 54, semiconductors. Semiconductors, interesting here. Got a big coil here. As you know, they have lagged the general market, so let's keep an eye on this. Chart 55, XOV, healthcare. So far, they've rallied off that 200-day moving average. They've been downtrending here for the last 2 months, but they did find support at the 200-day. Chart 56, banks. Big pop here last week. Remember, this ascending triangle I pointed out over a month ago. That played out awesome. Hope you guys caught that. At the time, I issued various ETFs for that, K-Web, stuff like that. Chart 57, financials, XLF, same deal. Pointed out that ascending triangle over a month ago, and that clearly played out big time. Chart 58, technology, XLK, they're testing their July highs. They haven't taken them out. The problem with this ETF, it's 2 stocks dominate it, almost 40%, Microsoft and Nvidia, but testing that resistance right here. Chart 59, semiconductors. I already showed a semiconductor. This is the ETF. So again, it's lagged overall. You have this open gap up here. So to me, that's still a magnet to the upside. Chart 60, here's XBI Biotech, guys. Remember, this tends to move as small caps, and small caps are outperforming. This is an ascending triangle. Broke out last week. Again, hope you bought some earlier than this breakout. So it's looking good. Chart 61, real estate. So far, you got a 3-wave ABC pullback. Didn't quite hit that demand zone. Got pretty close. Trying to bounce back. Should rates pull back here, this could start to rally. And finally, let's look at the energy market. XLE. This has been in a consolidation here for about 7 months. Perhaps with Trump in the White House, as you know, he's very friendly to the energy companies. Maybe we'll see this sector start to take off. I do like the consolidation here. Chart 63, here's the weekly chart. You have this beautiful coil pattern. That's what Trump would say. You got a beautiful coil pattern here. He loves the word beautiful. Anyway, so beautiful coil pattern. Looks really good. Chart 64, BPNR, Bullish Percent Energy Index system. Very simple system with the parabolic SAR. This one on a buy signal as well last week. Looking at oil services, now OIH, this popped hard last week. So far, pulling back off that 200-day moving average though. And here's the weekly chart. It did hold this long-term support trend line demand zone for now. So those are some areas to keep an eye on, the energy sector, guys, over time. Now let's go ahead and move on to commodities. Here's chart number 67, DBC. This is the weekly chart, up 0.7%. But again, otherwise, like I said, for the last 2 years, it's been in a range. Chart number 68, here's the monthly view of DBC. Again, it's been in this range, but consolidating. Look at the moving average ribbon. It's starting to really tighten, pinch here. And when you get those pinches is when you can get your bigger moves. So I'm favoring this to eventually break to the upside. We'll see. And chart number 69, here's DBC SPY ratio. Now clearly this ratio has been downtrending. What does that mean? The S&P 500 general market has been outperforming commodities. That said, this isn't a wedge pattern, so I want to keep an eye on this. If this were eventually reverse and curl up, we could see a big bull cycle in commodities. But for now, it's downtrending. Chart number 70, here's crude oil. Up 1.3% for the week. Just showing the weekly chart here. You can see it's been downtrending for a while. It's below major 200-week moving average, etc. Chart number 71, here's the daily chart. You can see the downtrend channel. Pull back on Friday. Almost got a little head and shoulder top here. But again, we'll see what this does over time. Chart number 72, UNG, natural gas. Here's a falling wedge of this developing I've been showing. Still fleshing out. Chart number 73, copper. Now, copper was the one commodity that was down last week besides precious metals. You could see pretty wild action here lately. So you had a big down candle on Wednesday, big up candle on Thursday, down candle on Friday. Otherwise, kind of stuck in a range here between support and resistance. And chart number 74, here's DBA, agriculture ETF. So far, we've had three-wave pullback into this demand zone. I took a long there. By the way, the KISS system is long as well, the high-performance KISS. So it's got a stop down here as well. So we'll see if this can play out. Again, logical long setup there. And chart number 75, here's the monthly view of DBC. Again, this should be DBA. I meant this to be DBA. Apologize for that duplicate chart. And this chart was out of order. Let's go ahead and move on. Let's look at Bitcoin. So chart number 77, here's a weekly chart of Bitcoin. Last week up 17.3%. Remember, we've always favored that pullback there in the June, July timeframe as a wave 4. We held that weekly demand zone that we pointed out. So now we're working up in this wave 5. Perhaps the next target is 100,000. Chart number 78, here's the daily chart. Again, you can see up, and it's up nicely here this weekend as well. Notice the breakout from this trend line and back test. That back test of the trend line became support. Congrats if you bought some of these Bitcoin ETFs that we've been showing. Here's IBIT. Even if you waited to buy it on that trend line break, it's been an excellent trade. And here's the leveraged version, BITX, doing well as well. So congrats if you got those guys. I think Bitcoin goes higher. Moving on, US dollar, chart number 81, US dollar, sort of a sandwich here. Big up candle, down candle, up candle. So the last two candles are within the range of Wednesday's candles. Dollar's had a heck of a move up here. We do have some MACD divergence now forming here, so be aware of that. And RSI divergence. Chart number 82, here's the weekly view. Of course, it rallied off that big support zone for the last couple months. Moving to precious metals, chart number 83, here's gold. Again, gold, as you know, broke that first uptrend line last week, bounced, back tested. By the way, that's now potential resistance. We did bounce initially off the 50-day moving average. But if we come back down and we lose the 50-day, I think we test that next trend line. And if gold is in a deeper wave 4 correction, I wouldn't be surprised if we worked over time to that 38 to 50% fib below and 200-day moving average. But that will be a good buying opportunity, guys. Chart number 84, here's the weekly chart of gold. Like I said, We could be starting this wave 4. Too early to say yet. Again, these parabolic moves like this is unsustainable. We've been in a parabolic move on gold. So, we view this as a wave 5 of 3. If we've started this wave 4 correction, I welcome it because it'll be a buying opportunity. Now, I did put out some inverse ETFs for this area. GLL, that's the inverse ETF for gold. So I don't know if any of you bought it, but it did bounce over the last week. As you can see, still looks pretty good here. Look at the volume patterns. So if you had some gold but you wanted to hold for tax purposes, but you wanted to hedge it, that's one way to do it. Chart 86, silver, also been selling off. Here added some fibs, is some potential targets to the downside should this correction get deeper. Again, I am long-term bullish on silver based on this chart 87, this monthly chart. I do think it over time makes it to these upper levels, even all-time highs. But it may need to go through a correction here short term. And chart 88, here's GDX, gold miners. Again, nice pullback from that channel the last couple weeks. By the way, we did fill an open gap there on Wednesday. The KISS system actually went back long, the high performance, but so far bounced back, found resistance at the broken trend line. So now we'll see. The stocks have been underperforming, as you can see on the ratio. Just like on gold, I issued dust, isn't it? Hedge on GDX, inverse ETF of GDX. And you can see it's popped out of the wedge so far. Finally, guys, moving on to the last part of the newsletter, the trade idea. So Amazon, nice pop last week, was one of our trade setups. Chart 91, Google was another one. Had earnings, so it popped out of the coil, pulled back, and it bounced back again. Some others, Rocket Lab has just absolutely been a rocket. I had it as a long back here in July, August. It's another setup there in September, another setup in October from that coil. Boy, this thing has been a heck of a mover. So trying to catch a little bit, play a little bit of catch up to SpaceX. But anyway, heck of a move here, heck of a trend move. Chart 893, ECVT, this was a long idea of mine a couple weeks ago. Out of this base, good volume patterns. It achieved my first target, filling that gap. And I stated that, if you took some profits, great. But potential targets over time could be the 200-day moving average and the next gap above. But make sure you've taken at least some profits because that was a heck of a percentage move. That's my style. On a good move, I take off at least 50%, maybe even 75%. Then I keep a little runner if I think it has more potential. That's my style. Your style could be different. Chart 94, CRBU, another beautiful move out of that base. Hit my first target here, as you can see. Next target's above. Chart 95, SNCY, another beauty. Excellent trade. Make sure you're taking some profits. Chart 96, Court, another beauty. I had it as a long idea over 50, and it's a heck of a move. Chart 97, Lucy, or LICY, was another nice long out of this base trend line. Again, hope you took profits on Friday. Look at that. It gapped up to $5, then sold all the way down to $3.25. But again, this triggered around 2.5, so it essentially doubled. If you get a double, guys, on a stock in a few days, take some damn profits. Chart 98, IBRX, here's another beauty. Was a beautiful long idea out of this base. Popped, pulled back. I said to watch for support at the 9 EMA. And so far, if you bought it there, it hasn't had a big screamer there, but it's giving you a trade. Chart 99, MBLY, another one. Recent one that's been moving up out of this base. Chart 100, here's Intel. I put that as a long back in September off this support, and I put it as a long over a week ago when it was near this trend line. It's given a nice trade so far. Chart 101, RXRX was one that started to trigger late last week out of this coil. Still looks really good. Volume's picking up. Here's some setups that have yet to trigger. Starbucks, still in an ascending triangle pattern here. By the way, you could be long now with a stop right below this trend line instead of waiting for it to take out resistance. Again, your choice. Here's a new one, chart 103, VSTM. Nice long base. Resistance is a clean $4. Chart 104, GCT, GigaCloud. broke out on Friday, but I think this could follow through still. Look at the volume patterns. So still looks good for momentum. Jabber 105, Rivian. It's been in the dumps, but maybe this starts to come back a little bit since Tesla's taken off like a rocket ship. Jabber 106, MBD. Nice coil pattern. One to watch for a long. Jabber 107, Talk. Here's a clean resistance at 335. Target would be the highs. Jabber 108, PRCT. Another long right here over this 99.35. I view this more as a short-term play, though, guys, just because it's quite extended. And chart number 109, the last chart, TSEM, here's another long. Resistance is 46.50. You could see the pickup in volume on Friday. So there you go, guys. Again, we'll see what happens this week. Quick check on futures. ES futures are now up 12 points. And gold is down only about 4. Bitcoin's up nicely, up 3,600 points. All right. Have a wonderful rest of your Sunday evening. Thank you for all your support. On YouTube, guys, please like, subscribe. Please comment. It helps if you comment. I need to get more participation on YouTube. I've only had a few comments per video. So it really helps me if you guys could do that. And that'll do it. All right. Take care.